Okay, assalamu alaikum everyone. Let's get started. It's I know we're talking to people from all different time zones around the world, especially those in Malaysia. It's really late for you guys. So we appreciate you joining our first global webinar for 2021, A New Hope. My name is Saad Zarif. I'm the VP of North America. I'm the host for this evening. Joining me today will be Sameem Abidi, who's our global head of portfolios at Wahid. He's probably one of the most important people on our team because without him, no one would be able to invest because he manages all our portfolios and investments. We have a great team lined up today that will be working with you and addressing your questions today. We have Fazil Siddiqui, who's our senior relationship manager based out of Middle East. We have Abu Luddin, who leads our business development in the UK, comes from some amazing experience there. Those of you who are from the UK have most probably come across him at some point. And then we have Izzat Fatihli, who is the executive director for Malaysia. So again, Q&A section, use the Q&A tab to ask your questions so that way the team can address them for you. And Happy New Year to everyone. We know things have been rather interesting in 2020, and the purpose of this webinar is to kind of bring to light what have we learned and what have we seen in the markets from last year, and what's the new hope that we look forward to moving forward. So just a quick few housekeeping rules. I want to make sure that my compliance is happy with me showing you guys sort of disclosures that, again, we're not going to give you any advice here. Any questions related to advice will not be addressed. Our robo platform does the advice for you when you go through the Q&A. But our goal is to connect with some of those basic things that we used over and over again as a reminder. And I know that some of you people are new as well, so I'm definitely going to make sure that we kind of do a quick reminder about who Wahid is, who we are, what we do. I'm going to cover something I've always believed in and how the investment space is working, what kind of psychology to apply, and then I'm going to hand over to Sameem to kind of take us through the portfolio's market performance, and quite honestly, what we should be looking forward to and how should we behave in the market when it comes to it. This picture never gets old. A lot of you who've attended multiple webinars have seen this over and over again. This was a pinnacle moment in the life of Wahid Invest that over a year ago, prior to COVID, so to speak, actually, that we did the launch of our first publicly traded fund, Halal, HLAO, in New York, and it was an amazing experience. So while we have this screen on, I'm going to do a quick introduction about myself, then I'll invite Sameem to do his introduction, then we'll carry on. I've been Wyatt for almost 3.5 years now, manage the North America region to make sure our clients are satisfied and that their needs are fulfilled the right way. That, in a nutshell, is what I do. I have about 16 years of private wealth management experience. So I've been in the industry for a while, seen a lot happen, including the 2008 market crash in New York. But that's why I was working at the time. Teaches you a lot. You learn a lot from it. So even when the pandemic happened, yes, it was a shock, a surprise, something new, but nothing surprising in terms of how the markets even behaved. If anything, it was more shocking that it did better than expected. So that's my experience. I usually try to make sure that our clients are happy with the experience they're getting and that we're doing our best to provide them the best service we can. So, Sameem, if you have a brief moment, can you kindly just kind of remind everyone about your amazing experience, please?
Assalamu alaikum. Thank you all for joining us. As Saad mentioned, perhaps a bit over graciously, I help look after the portfolios here at Wahid. I'm based in New York City, though I am sitting in Dubai right now. But when we did the first of these webinars, we were essentially talking to an exclusively U.S. audience. The following year, included the UK. Following year included Mauritius and Malaysia. And now, mashallah, they can't really pinpoint one main place. We have attendees from all over the world as well as panelists from all over the world. So, alhamdulillah, that every time we talk to you guys, the list keeps growing, the geographic scope keeps growing. And some of these things might seem redundant for those that have been with us for a long time, but it is also new for folks that are just joining us as clients as well. Saad, if we go to the next slide.
Yeah, so I'm just going to do a few things quickly, just as a reminder that Wahid is present in over 130 countries. Alhamdulillah, we have an international platform out of Malaysia as well, as Sameem said. He's from New York. We started out of New York. And then, of course, UK as well. And again, we are in multiple jurisdictions as a firm. A lot of times people talk about or want to learn about a Sharia board. These are the folks behind the scenes who ensure that the products and investments we are offering you are Sharia compliant and in line with Sharia compliant guidelines. You can find the information on our website also. We've got an amazing team of Sharia scholars that work with us. So we are very privileged with that. A quick reminder to those who are new to Wahid or maybe are attending this webinar and are considering joining Wahid. We are basically a digital platform, meaning everything is done online or through our app. Talking about our app, we actually recently launched a new version of our app 2.0 for Malaysia and the international team, which is basically a hint at what the US and UK will be getting in the coming months, inshallah. So we have proprietary technology. Everything we do is in-house. We do not outsource our technology or services at all. And that's what makes us unique in what we offer as well. It's a very robust and a full audited tech stack. Quite simply, that means that we really know what we're doing. We have the right people lined up to give you the best seamless experience of investing using technology. In other words, the smartphone that you have in your pocket, in your hand, or sitting next to you. As I said, we are registered in different jurisdictions. What does that mean? We need to make sure that when we're offering advice, which is what our robo platform does, we are aligned with regulators of those countries as well, without which you cannot. Takes a lot of time and effort to achieve that. So alhamdulillah, these are some of the major countries that we are registered in with their local financial services authorities to be able to provide the service that we do, without which it's not possible. And that's something for you to kind of keep in mind as well. The one thing I want to talk about before I hand over to Sameem to cover some of the really good stuff that even I'm excited to learn about and see what he's been doing, what he's been looking at, and for you guys, is to put in perspective why Wahid was incepted in the first place. What was the reason Junaid Wahid, the founder, created Wahid? Not just because of the story you all have heard about the cab driver he had a conversation with that made him realize that one product investment is not the ideal approach, but it's all about giving a voice to Muslims as well. Having an approach to know that we are investing in a Muslim-owned, Muslim-run company for Muslims, by Muslims, basically. And the one thing that I've recognized is that nowadays, halal investing is becoming more common and more easily accessible thanks to technology. It is a massively growing industry with over $70 billion in assets globally in Sharia-compliant investments. What the Wahid platform allows us, all of us, to do is to have a voice when it comes to representing Muslims in the investment space. In America, there are companies like Fidelity, Vanguard, Charles Schwab. You guys have heard of them. You guys have heard of Warren Buffett. You've heard of John Bogle. These people are the voices for investors. Just because of the large amount of money that they have managed or invested themselves, we want to reach that level. And to put it in perspective, the last paragraph I have written here that hopefully you guys can see is that, sorry, I'm just reading some notes as well, that by focusing more money in halal industries, the more purpose is that we want to ethically focus on changing the narrative of these companies. When you invest in whether it's American stocks or foreign stocks, you are basically becoming a shareholder, and that gives you a voice in what those companies are doing as well. That's a big deal. If, for example, $1,000, even $10,000 was going in the grander scheme of things, we are probably about what, close to 2 billion Muslims in the US. That's like even to like over $1 billion invested at $1,000 each, for instance. I mean, close to $1 trillion that would be invested by Muslims if you were doing $1,000 investing by about 1 billion Muslims. Our goal is to make investing accessible for every single Muslim around the world. And that is only possible by you guys trusting us, investing in Wahid, allowing for your assets to grow, inshallah, over time. That gives us the power to do so what we're doing. So make no mistake, collectively, we're more powerful than individually. And that's what the Wahid platform is bringing out of Muslims, is a Muslim voice, a Muslim platform, growing time and time again, or, year after year is what we're trying to do here, to give a bigger voice to Muslims. So that's the biggest perspective I want you to take away from at least my end today, is that whatever you're doing allows us to open up this platform to more and more Muslims, that allows us to have a bigger voice and a bigger representation in the global investment space. So with that, I'm actually going to move on to the next slide. And Sameem, please carry away. And keep reminding me whenever you want me to switch slides.
Sure. Thank you, Saad. I like the sort of the title of this webinar, A New Hope. We obviously have some Star Wars nerds on our team, but notwithstanding, 2020 was a bit of a rough year, to say the very least. Just to highlight a couple of events, there was political tension in the Middle East, and between U.S. and Iran, followed by the wildfires in Australia, wildfires in the U.S. Ultimately, obviously, coronavirus becoming the headline for the entire year, and the economic crisis that ensued, and that we're actually still living through. So this chart is essentially, the reason we have it is because it was a slide that we showed in April or May of last year. And so the reason we brought this up is, this was a time where everybody was pretty panicked. The market had fallen from its peak, depending on what index you were looking at, anywhere from 40 to 50%. And so, followed by sharp spikes and sharp falls. And so that's what the dotted lines were highlighting. And what we were telling folks was, well, listen, after the worst days, the markets tend to see sharp rebounds. So if you're really trying to time the market, buying and selling very tactically, chances are you'll miss some of these rebounds. And it's not sort of a Wahid only philosophy. It's really history that's shown this to be the case. During this period, sentiment was very different. We got a lot of, somber questions, a lot of very pessimistic questions about, is this the end of, the world? Is the market kind of going to collapse? Are the world financial systems an illusion? Things that were, everything from slightly concerned to existentially worried. But if we go to the next slide, this is what really the big picture looks like. This is the S&P, that same index from the previous slide over the past year. And so this isn't to be trite, and this isn't to sort of poke fun. I think all of us are wired to have an emotional response when we're losing money, when people are losing jobs, and when there's actually a world pandemic taking and impacting people we know personally. I know a lot of us have folks that have been impacted directly by the coronavirus, but notwithstanding, if we take our scope of our conversation to markets, investing, and wealth generation, if you look at the peak around February 20th or so, the peak, not the trough, if you go to the left side, up there. So if you, let's say you opened a Wahid account and you deposited that day, let's, subhanAllah, maybe you were one of the more unlucky investors and you're like, man, I bought I bought and invested at the top. I should have waited, right? We're showing this chart just to show you that's not really the way to think about it. If you can see, even if you were the unluckiest investor in 2020, you're still up year to date if you just held on to your holdings. Now, it was anything but a smooth ride. It was the most turbulent ride you could think of, particularly on March 23rd when we hit the bottom. But nonetheless, reiterating that you should have a long-term focus on your assets. These should be funds that you don't need in the next month or two, but rather funds that you can hold for a few years. Markets tend to be upward sloping because they do mirror economic growth. And this index in specific is comprised of US stocks. And this analogy isn't just on 2020 and the COVID related volatility. If you go back to the Lehman Brothers in the 2008 crisis, which we don't have a chart for, but we can speak to, if you were the unluckiest investor and you bought, the market the day before Lehman Brothers went under, 4 or 5 years later, you were still up. And that was, that was also a catastrophic crisis. Why are we saying this? We're saying this because it is much better to have an even emotion temperament than a brilliant investment acumen in these times. If you can wait it out, remind yourself that these aren't funds that you need tomorrow. Over the long run, we're confident, if history is any lesson, that you should be okay and your assets and your wealth should be compounding over time. So go back to the previous slide. The emotional temperament associated with, if you go back one slide. Saad, if you could go back one slide.
Yeah, sorry, just having a little technical difficulty. It'll get fixed in one moment for you.
Yeah, no worries.
There we go.
So the emotional attachment and sort of the triggers that this slide spark, going to the next slide, are very different from the ones in the next slide. And what changed was central banks stepped in, fiscal stimulus. You've seen trillions of dollars from governments around the world to their people, particularly in Europe and the US. And so eventually that's going to have an impact on markets. And it did have an impact this year. This year was really everything that we can kind of teach you on a primer basis about investing, markets, long-term, emotional temperament, risk tolerance is really captured in this chart in this year. This year's been a crash course in personal investments. And we've seen it with the proliferation of Muslims on Robinhood type apps, mashallah. But this year's really been a lesson. And if these types of sharp swings are too much for you to handle, well, that's why we have more conservative risk profiles that move less sharply and are smoother over time. So, we'll get to that to the end. But when you open up a Wahid account, we ask you some questions to measure, well, what is your risk tolerance? What is your stomach for these types of rises and falls? What is your income? What's your time horizon? And based on that, we'll recommend a portfolio to you. And it's all to take the psychology, the financial situation, and the temperament into account when proposing a portfolio for you, because all those things culminate in what's best for you. Next slide. So this is just a snapshot of what the different Wahid portfolios across the world did. These are model portfolios, meaning that most client experiences mirrored this exactly. Even if they deposited in the month, during the month, they change risk profiles. As you can see, from the very conservative, we have anywhere from around 2 to 6% returns. These are all net of fees, by the way. All the way to the very aggressive portfolio, we've had clients earn 24% or more if they were all in equities. And some clients that funded, during the volatility did better than that. This is an unbelievable number. And we were discussing this internally. Globally, we've generated over $15-20 million for the Muslim community who are investing on the platform. That's money that'll be used to send Muslims to college, money that'll inevitably be given to zakat, money because Muslims love to eat, going to halal businesses, going to masajid, and going to different industries. There's an economic multiplier effect of being invested and having access to financial markets. No longer is this something that is reserved for people that have over $1 million in assets, but our minimums continue to be only $100. And that's because this is intended for the millionaire as well as the student and everybody in between. But these are returns that we're very proud of, that we think have been super competitive. And a lot of this, mind you, is done passively. We're not stock picking. We're not passing on hot stocks of the week on WhatsApp groups. We're telling you buy the market, and over time, the market should do better than any one name. And this has really been the proof in the pudding. And just as anecdotally, we launched our ETF last July 15th of 2019. I guess at this point, it's a year and a half ago. Since inception, since the launch of our ETF, our ETF is up. I'll give you the numbers right now. The ETF is up about 38% on a total return basis, HLAL in dollars, 38%. The S&P 500, which is usually the gold standard for market performance, what everybody compares their performance to, is only up 28%. Now, this isn't because we're actively making bets. It's just the way the index is constructed. And you should see this ebb and flow over time. But 10% outperforming the broader market is phenomenal. The myth back in the day was in order to invest with your ideals and religious beliefs, that you had to sacrifice something financially and in dollars. And what we're telling people is, no, that's not the case. You can get market returns. And in the past year and a half, we've actually exceeded market returns. But generally, we're saying you can get market returns at a competitive price. And you shouldn't have to pay up for remaining halal and Sharia compliant. So these are things we're very proud of. Obviously, individual performance will vary depending on when you deposit it, but generally they do track to these portfolios very closely. Next slide. So how is 2021 going to be different from 2020? We hope it's different, and we expect it will be different. There are a couple of things to consider. Markets will be looking at the pace of vaccine distribution. The US initially has gotten off to quite a slow start, but the vaccine producers have ensured that they'll have plenty to go around this year, so that up to half the populations in a lot of these countries are vaccinated, which hopefully provides that herd immunity that a lot of medical experts talk about in kind of phasing this virus out over time. We're far from out of the woods yet. Obviously, there are faster strains in the US and in the Europe and US spreading, resulting in lockdowns. But this vaccine is really going to mark the end of this crisis, and how fast that can be produced and distributed will dictate everything. Second, what will the recovery look like? Is this going to be a sharp bounce back with everybody going back to work? Well, a lot of those that lost their jobs were in the food industry. I know in places like New York City, a lot of those businesses will be closing down. So what will the recovery look like? Will this be a prolonged period of economic pain, or will things rip back pretty quickly? The jury's still out, and we're watching that pretty closely. Well, the high levels of debt, each government that really introduced all these stimulus programs, from $1,200 checks to unemployment insurance to rent forgiveness, this takes a lot of debt to do. Will these high levels of debt by governments impede their economic growth going forward? A lot of academic economic papers have shown that the higher the levels of debt, the debt to GDP levels, the more that constrains economic growth in areas like Japan and the Eurozone, and now US, unfortunately, which had relatively low levels of debt, but has ballooned since the last 4 years. Uncertainty and erratic policy development announcements in the US, without really getting into politics, are expected to subside. Twitters and the White House have really been a source of volatility for markets. One day to another, there have been tweets that have shaken markets. And at least that factor of uncertainty is expected to go away with the transition that's going to take place next week. So, markets like clarity, markets like transparency, and removing that X factor, that live wire of which way is this going to go this week, that'll calm markets. And I think it's good for everybody just to have a consistent messaging out of DC. And this is the second to last bullet, but I think it's probably the most important bullet. Why is it that markets are up when we're in unprecedented times with this pandemic? Like, in a lot of ways, people think it doesn't make any sense. And optically, it doesn't. Millions of people are out of work. Millions of people are, impacted by this virus and have died. So why are the markets up? The answer is central banks around the world have really intervened, led by the Federal Reserve, the ECB, the Bank of Japan. Trillions upon trillions of dollars have been pumped into the markets to keep the economy afloat, to keep investor confidence high. And that's why you're seeing a situation where, though the present economic situation might be a bit dire, markets have actually looked forward 1 to 2 years from now and are pricing based on that sentiment. So they've moved beyond the immediate economic worry, but rather they're looking forward into what the world will look like in 12 to 24 months. With that, again, we take the lessons learned in 2020 to reiterate our long-term philosophy. If you invested based on current reality, you would assume the market is half of where it is right now, if not lower. But the reality is that's different. And markets respond to information a lot quicker than you and I. And that's why it's important to be invested and try not to time things going forward, because it's very difficult. Even professionals in the industry don't claim to be able to do that consistently. So remaining invested and reminding yourself that these are long-term funds. These are not funds that are being used to pay my electric bill. If they are, those are better suited in a checking account. And our client advisors will be the first ones to tell you that if this is money you need to pay your rent, that money should be in cash. Without knowing the nuances of your specific situation, if it's immediate, that's money that should be in cash. But once these are funds that you don't need over the next few years or more, then you can start thinking about them with an investment mentality and how the markets can work for you. So just to reiterate, volatile year last year, we're expecting it to subside some point mid-year onward into Q3 and Q4 with the vaccine distribution. Central bank policy, as long as they continue their policies, we expect markets to like that. When they announce perhaps some stepping off the gas pedal, that's when you should sort of keep an eye on it and remain invested. I think that's really the key here. With that, we'll go to the next slide, and perhaps I can pass it back to Saad.
Yeah, thank you very much, Sameem. That was very enlightening, and kind of in line with just a couple of more slides I have left to kind of cover that I felt like would be pretty useful. So to what everything Sameem has said, it can be nutshelled or put in a nutshell with this slide right here. There are two kinds of investment strategies people like to apply. In our industry, we use them as core or satellite strategies. What's your core strategy? Wahid, investing your money within a professional platform that does not require you to think when to buy, when to sell, when to react. It's all about act. Act by applying consistency to what Sameem said. If you're investing with a professional platform, that's your core strategy. That's the money you have for medium-term, long-term strategy based. Now to what Sameem said, yes, if you know you have to pay rent, your mortgage, your bills, that's cash money. But let's say you're someone that does know a bit about investing. That is someone who's, hey, I want to dabble in the stock market on my own. Well, that then becomes your actively managed satellite strategy. Small amount of money, that you should be and must be okay losing. There's no guarantee you're always going to make money if you're investing in the market, but at least with us, we're not trying to time the market. We're not buying individual stocks for you. You are investing in funds, completely different strategy. Results are in front of you. Samim has shared them with us. But if you're doing it on your own, think of it as a satellite strategy that you're doing on your own, but that's not the bulk of your return to live off. That's just something you're doing because you want to try it out in the market, but you need to be okay if you lose money from it. Can't blame anyone else but yourself if you're doing that. But from a professional managed, passively managed strategy, that core strategy is done through a professional way. So keeping this kind of a visual in mind will kind of allow you to dissect your finances, your investments accordingly, keeping you diversified and grounded as well, especially in unprecedented times. Most people have a tendency to just react in an emotional way because quite simply, and I did not cover this time around, but I always do usually in most of my slides, that the biggest emotional attachment we have to our money is the emotion of not recognizing the substance in why we're investing. Substance is related to your goals. Emotionally, we make irrational decisions, and that's when usually we make a decision that's not beneficial for us. So do keep that in mind. To what Samim did, I kind of wanted to add a few quick pointers as key takeaways in a nutshell from what we've seen, what Samim covered. Number one, we know the index fund strategy works. Why? Because it diversifies your investments. You're not picking and choosing 1, 2, 3, or 5 stocks. You're basically mimicking the index. That's what we do with halal. The FTSE Russell Sharia index that we track or we mimic, we're not doing any magic with it. Whatever they have, we replicate it in the portfolio for you. So you're getting access to over 200 stocks. A lot of our clients have access to it. And again, like I said, don't let emotions dictate your investment goals. The moment you do that, you will lose in that moment. You will lose for sure. I've seen it in my 16-year history. Samim has, he's worked at JP Morgan, like I said, at Google and stuff. That attachment to money from an emotional standpoint can make or break your future goals. So be focused on that. And this is something I'm just going to chime into what Samim said. Consistency is key. And the key to that is currency cost average. Decide on an amount to invest. Stick with that amount regularly. That will surprise you more at the end of a year, 2 years, 3 years, as opposed to just dumping money lump sum. Sure, if you have more to start investing with, go for it. But then keep that consistency going because that will be the key to success. That works in our lives. If you're working out in the gym and you're consistent, you'll get more fit. Not by just working out once in a while. That's not the way to it. But the more consistent you are, the better you get. That's how investments work. And I always tell people, never forget about and this is more for the US clients actually, or even folks in the UK. There are ways that the services we provide are related to retirement accounts or pension and so on. If you've moved jobs around, you have an old retirement account, we can manage it for you in a Sharia compliant way. So always remember, reach out to our Wahid teams. We have teams available right now that are addressing questions for you as well. Anytime you have an issue, you have a question, you're not sure about something, ask us, reach out to us. Yes, we're a digital platform, we're a robo platform, but we have humans of Wahid behind the scenes working really hard for you. And we can't do our job if you don't reach out to us. So always make sure you're reaching out with questions. I always tell my clients, there's no right or wrong question, but if you're asking a question, it means you're also open to gaining knowledge. And that's what we try to provide. Follow us on YouTube. Follow us on Instagram. We will be doing future live talks on Instagram as well. I'm hoping to block Samim for that at some point in the near future, inshallah, for that. Follow us on Twitter and Facebook, of course, as well. So you're up to date with what the future holds for Wahid, what are the new products and technology we are looking to introduce as well, to stay up with times and to keep things competitive in this market as well. And again, lastly, align your personal goals with your investments as well. To what Samim said, because you have the choice to pick and choose any risk profile you want after the platform has recommended you one, just remember you want to align your goals with that risk profile. They say that sometimes people like to think like a teenager. Teenagers have a mentality that I'm going to be around for a long time, so they do everything in an aggressive mode. My 3.5-year-old is more aggressive than anyone I know. Everything is quick, immediate, because he's not thinking about, his short-term consequences. For him, everything is long-term in his tiny little mind. So based off your age, make the right decision as well. And keep always that in mind. These are the contact details. I want to leave this slide up as the last slide with all our phone numbers and emails for different regions that you are in case you don't have this. We also have this on our website. I was going to do this, but actually we're kind of running tight on time. So I want to make sure that you guys check out our website. We've made some enhancements to it. We launched a new app for Malaysia and the international clients. If you have not received it yet, you want to probably update your from your app store or Android, wherever you're using, and take advantage of the new app. It is absolutely charming and amazing. This is also a hint of what the future holds for UK and US clients. We have a lot of cool stuff in the pipeline that's coming out. Can't talk about it just yet, but inshallah, it will be coming out soon for sure. So, just keeping those things in mind. I know that we've addressed a lot of questions, guys, and Sameem, kind of going through a few here to see if there's anything before we end that we can kind of ask about it from a Q&A standpoint. We've had a couple of questions come up related to Fed policy, Sameem, maybe on a broader scale, that a lot of money last year was pumped into the market, produced as well, paper printed. Can that have a negative impact on the market at any point in the near future?
Yeah, it's a good question. Say that these are unprecedented times is hugely understated. The central banks have shifted from focusing on unemployment and inflation, which are traditionally their stated targets, to now that actually we know that they look at stock market levels as a litmus test of whether or not they've achieved their goals. This is sort of a bigger issue that I think is of concern and people need to figure out. But the Fed and central banks have actually put themselves in a corner. Why do I say that? Is because this QE infinity that they're currently doing, it's bigger than any QE package they've done prior, including 08, 2013, QE 1, 2, 3. And they're actually buying corporate bonds this time. So every time they expand their program more and more. The Bank of Japan is a good example because they're actually buying stocks. They're one of the only central banks actually buying stocks, which if you told central bank chairman this from 50 years ago, they'd probably have a heart attack. But that's the world we live in. Now, once the central banks announce that their QE programs will taper off, you can take a lesson from 2013. Ben Bernanke in the US announced the tapering, which just means the purchases would increase at a slower rate, not that they would stop completely. And the market had a bit of an erratic reaction to that. Subsequently, it recovered. So it's not really a long-term concern, but in the short term, it might introduce some uncertainty. Now, my personal view is that central banks like the US Fed have actually put themselves in a corner. If they announce that they're going to stop purchases and the market reacts somewhat erratically, they'll have to step back in. So in some ways, I think the market is not bullying, wouldn't be the word, but has cornered the central banks a bit. Now that they've done QE infinity, I expect that they'd have to continue it in some form, even if it's smaller in the future. So summary to your question, very long-winded, is yeah, short term it might introduce some volatility. Long term, if things get bad enough, they'll step in again, and that should be good for markets. So there's a lot more that they haven't done yet that they can do. If you take Japan as an example, so it doesn't concern us long term from a market's perspective.
Fantastic. That means that there are checks and balances in place that one cannot foresee right now, but based on what you're saying, they have the ability to intervene as and when need be. So that's good to know. We've had a few questions from an international perspective about Saudi as well that we're looking to launch there. I know you're quite involved in any of our portfolios that come out globally. So I can say this, that yeah, it is one of the countries in line with that we're working on. Sameem is working closely with our Middle East team to make that happen as well. So inshallah, at some point we'll be in Saudi as well. People are asking about like tracking like the VIX volatility index. Do you have any comments on that at all?
Yeah, I mean, the VIX is essentially, an indicator of volatility as measured by implied options, right? Implied volatility on a go forward, and options usually dictate prices. They're not any underlying asset. I think looking at the VIX is very useful from an analytic perspective, just like looking at interest rates tell you a lot of information about a government's growth and inflation, but it doesn't mean that we invest in it. It's not an intrinsic asset. More so, it's just an option speculating on future volatility versus current volatility. So in that sense, it's a speculative instrument, whether it's the VIX or whether it's the XIV. The XIV was the inverse VIX, for those of you that kept up with it, that actually ended up shutting down because the fund was it blew up, just to put it simply. That's obviously not our fund. It's a conventional fund that was options inverse shorting volatility. So these options, they're tricky. They're not entirely intuitive to understand, and they're not considered generally Sharia compliant, though they do give you a good bit of information about the future.
Okay, great. I think that's all the time we have for now. And just again, bringing up the slides for making sure people know that none of the stuff we've discussed is an active advice at all, but more information for your purposes. I think our teams have addressed the questions. If there are any questions missed, the teams will be reaching out to you. This webinar is being recorded. Obviously, it has to get passed through compliance. And then inshallah, our respective team members and heads of different divisions will be then reaching out to clients who either registered, attended, and so on, or did not attend. And then inshallah share the recordings with them once it's approved by compliance. May take a few days. Jazakallah khair. Thank you very much for everyone to attend. Sameem, again, as always, thank you so much for your time and the insights you give us. It was a pleasure again to work with you on this webinar. 2021 has kicked off strong for Wahid. We have a lot of clients reinvesting those that were on the sidelines last year. And again, the key takeaway is consistency. That's all that matters. Jazakallah khair, everyone. Sameem, thanks again for your time. Thank you to our global team members who have been supporting us in this webinar and addressing all your questions as well. Jazakallah khair.